Hey guys, it's Sig. I just wanted to do a quick video on Tick as it's become more and more common within our trading. And you guys have had a ton of questions. So just a basic overview of what like the NYSE Tick is actually doing is within NYSE, there's about 2,800 given stocks at any given time. And what Tick is doing, our ratio down here, is actually taking all of the stocks that are on an uptick and subtracting it by all of the stocks that are on a downtick. And that gives you your readout of, where Tick is currently. So a good example would be, there are 1,800 stocks pushing and there's 1,000 stocks going down. And that would give you a reading of about 800 on Tick, right? So an uptick, all that is any price movement that's pushing over a cent on a stock that's over $1. So it could be $100, it could be 1 cent, but any movement that's pushing higher is going to be considered an uptick. And any movement that is pushing down from a cent to $1,000, whatever it is, any stock that's going down at any given time is going to be considered a downtick. So when we're looking at our tick index, we're looking at the combination between these two to give us an overall reading of if there are more stocks at any given time in an uptick or a downtick. When markets are going up, traders are taking the offer, resulting in more upticks than downticks, giving us our push up on our tick index. And when they are buying the offer, they're buying the ask, right? So they're pushing price up on our DOM to a new high. Whereas if we're pushing down on the market or on an underlying, they are selling on the bid. And the bid is going to be lowering and lowering and lowering until people are willing to buy on the ask again, keeping our price fluctuating within the auction. We can use this to create a short-term intraday oscillator with our tick by finding the areas that are considered overbought and oversold for our short-term trend moves, right? So when tick reaches an extreme, and in this case, we're considering the 1,000 to 500 as our extreme overbought area, whereas our negative 500 to negative 1,000 as our extreme oversold area. So these are the most likely points for a potential reversal. And we can see this throughout the day as tick ranges in between these zones. 0 being our neutral level, usually our bounce point for either a bullish or bearish trend. So if we're bullish, you'll see tick bouncing between this range with 0 being our base and 500 to 1,000 being our top. Whereas in a bearish trend, we'll see negative 1,000 to negative 500 being our base and 0 kind of being our top, with slight fluctuations up, but never a hold over our 0. And that's what's creating that oscillator effect that we're looking for. Okay, let's get into some examples. So before you do anything on any chart, you need to be marking your supply and demand levels, as well as just your basic support and resistances, halfway backs, whatever you want to be doing for your basic price action trading. Tick is a secondary signal. It's never a buy-sell signal. We always want to be using this into a known level of support or resistance as a secondary signal for confluence with our bias already, right? So if we're looking to go long, we want to see a secondary base forming or a selling exhaustion on tick or a buying exhaustion on tick, depending if we're trying to go long or short. So here's a really good first example where we're seeing price make a new high while we have tick bottoming out from our old low to our new low, right? Which is a higher low on price, but an equal low on tick, giving you a nice bullish divergence. What we have here is we have a known resistance level from our gap down. This is an area of supply that we know that price is going to potentially get exhausted into. So what we're looking for here is a divergence in our overall tick to our price ratio. So price is double topping or a slight higher high. Well, Tick is making a significant lower high into resistance. So on the secondary push up into our price action here, we have Tick being unable to breach our 500 level, showing us that there's less market participation up in this area, and we have more stocks now selling than buying from our initial push up. So we have a divergence here compared to what price is actually doing. What we're looking for is this breakdown onto our zero line for that retest and then that continuation lower. Is exactly what we see here. And from what we discussed earlier, it's the exact same setup where once we breach below, we now have the potential for a downtrend continuation, right? So as long as we're able to hold this zero line, we have a continuation of our overall trend to the downside from this breakdown, giving us multiple entries once we understand that we have a trend and that we are going to be rejecting into our zero. And you can see this happen over and over again as we push down. So I just did some simple retracements from our high to our most recent low, and that gives us our 618 to 0.5, and that is our resistance in this reflexive move up that we have. Also have a bearish tick divergence, where we have tick making lower highs, we have price making higher highs into our resistance. This is giving us confidence that we can take a short into this push because we know that the market is not participating behind it. Less and less participation on each retest into our resistance. You can see that again here. This push down into our negative 500. Have a push, and then we have from our recent high to our recent low, we have a retracement and a rejection push down. You can see that here as well, where we have a push up into our resistance, and we have a flat top on tick. So equal participation, but a higher high on price into our double top on tick gives you a rejection and a push down into our support. You have a slight bullish divergence here that you could play by seeing that price is pushing down, making lower lows, while tick has found a base at our extreme, at our negative 1000, and has now made a secondary base at a higher level, which creates this squeeze to the upside, right into our resistance. We have a secondary push, pushes right back down into a potential higher low base, which we try to then squeeze back up into and reject, right? So we have a known support level from our previous buy area. This is a fair value gap, I think on the 15. And we are able to find our tick low. So this is your best risk to reward here, right? This is so oversold, right? So we have an exhaustion of sellers into a support. You have another potential buy for an upside. And if you do a measured move just off of this high to our low, I'm just going to flip this to green. You have a hold of our 0.5 to 618 golden zone, right? And you have a bounce up. And we can see here we have our tick low, and then we have our higher base forming at our negative 500, which then pushes up into our zero level. So even though we're unable to hold this for a continuation trend, we can play these short-term reversals to the upside just with basic retracements and understanding that at this extreme low tick, the best odds are for us to go up, right? So we can play the reversal and then buy the retest for the continuation if we see the secondary base form. What we're looking for after this secondary base forms is for a push into our zero level and the potential hold for that continuation here. If we got that continuation, we would have been able to get a squeeze probably all the way up to here off of this reversal continuation out of our bearish trend. That would have been our downtrend break and retest right in here. But we didn't get that. We got a rejection from our previous high here into our resistance, And now we have a new level of resistance forms. I think this is a 5-minute fair value gap, if I remember correctly. And we push right back into this as a resistance. And you can also just do your basic retracement on this, right? So we can turn this back over because price is below, flip this to red. You can see that we have a perfect rejection from our high to our most recent low, impulsive down. We have a retracement into our 0.5618 area and a breakdown. And you can see this here that we're unable to breach our zero level, our neutral, giving us our bearish continuation to the downside. Right? We've got our oscillator oscillating below our zero to our negative 1000. So your next best bet is if you missed this buy signal here from our bounce, you can get another short entry with the best risk to reward, understanding that we have a selling imbalance above and are halfway back here into our zero level with tick unable to breach. And that gives you a short signal to the downside. Something that I didn't mention exactly is the need to, when measuring divergence or looking at any kind of signal, you want to be measuring it from the same side of price action. So here we're taking it from the lows, and we want to be looking at it on our oscillator from the lows as well. Just as we're looking at it from the highs here, we want to be looking at it from the highs on our oscillator. Never want to take the highs on one side of, like on price action, and then take the lows on your oscillator. You're not going to get reliable signals that way. When we're taking these divergences, we want to be measuring the same inputs. Just in closing, wanted to mention that we have created an indicator to make this a little bit easier to follow throughout intraday. This is actually putting channels on your tick for you automatically throughout the day so that you can easily spot divergences, as well as your highs and your lows for the day and your current price. And these pivots are automatically placed for you. There's a ton of settings within, as well as letting you choose between the NYSE or the NASDAQ, depending on whichever tick you want to use, and tons of customization, as well as divergence and sensitivity for the channels themselves. So definitely worth checking out, and I think it's probably one of the more useful indicators you can have on a chart if you are a day trader. Really hope this helped, and hope to see you in the next video. Thanks.